cash, income, and profit are three very different things. And here is why this is so important for you to understand and be comfortable with the differences between them. Because if you are assuming that $100,000 in your income is the same thing as $100,000 in your cash account, that might not be true. Also, as a disclaimer here, this very much depends on the type of accounting method that you're using. The one that I'm talking about is the accrual method of accounting, and also how you are recognizing your revenue, how your bookkeeper or accountant is doing that. But let's look at a very simplified example of how a profitable company can still be running out of cash. Let's say that you send me a bill for $100,000 and it's in the middle of November. And your net terms for that bill, meaning when do I have to actually pay you, are net 30, meaning that that bill is not really due until middle of December. And because I am looking at my own cash flow, I am not going to pay you until middle of December. So you have billed me in November. You are seeing your income at $100,000, but the cash is really not going to be sent over to you until middle of December. And let's say also that you currently have started with $60,000 in your cash account. So you know that you are going to have $160,000 in your cash account in the future, but currently right now you're at $60,000. And you have other expenses in this month of November. You have to pay your people, you have to pay your rent, you have to pay your marketing person, plus you did some travel. So let's say that all of that together has cost you $60,000 for the month of November. So how does this look like on your financial statements? So remember, you have billed me $100,000. So you have your income of $100,000 coming in, and then you have paid all of these expenses at $60,000. So $100,000 minus $60,000 at the end give you $40,000 in profit. So you have made profit in November. Yay, yay. But that's not the end of the story yet. Because remember that you have started November at $60,000 in your bank account. However, you have had to pay all of the people and everything else that happened at $60,000. So what you're ending in November with is at zero. So you have made $40,000 in profit, but you have still had $0 in your cash account. So this is how a profitable company can still be bleeding cash and not have enough resources to actually pay people. That's why it's important to understand the differences between income, profit, and cash, and not only look at whether I'm profitable, but also look at your billing practices and how are your customers actually paying you. And obviously, if you're profitable, then eventually things are going to trickle down into the cash, but the billing practices are important part of that as well. So understand the nuances and the differences behind it, because that is going to really make a difference of how you are planning for the business and how you're actually managing the business.